All right, let's jump right into it. Bank of America just dropped its latest quarterly report, and wow, the numbers are something else. We're going to unpack what's going on inside one of the biggest banks on the planet, and maybe more importantly, what it tells us about the economy as a whole. So, the headline number is just massive $8.5 billion in profit. And that's in just 3 months. It's a huge 23% leap from this time last year. A big number like that never really tells the whole story, does it? So, what's actually fueling this incredible performance? Where's all this growth coming from? That's exactly what we're about to break down. Okay, let's start with the 30,000-foot view. This was a true blockbuster quarter for the bank, and it all kicked off with an 11% surge in revenue. That's the rocket fuel that powered those record profits we were just talking about. What's really impressive here is that the growth is happening everywhere. It's not just one part of the bank having a good run. I mean, look at that, a 43% jump in investment banking fees. That's a massive signal about what big businesses are doing. Every single key metric is pointing up, which tells you the whole machine is firing on all cylinders. So to really get what's going on, we need to pop the hood and look inside. I find it helps to think of Bank of America as having 4 powerful engines, and each one drives a different part of the business. Let's take a look at them one by one. First up is the engine that most of us know best, consumer banking. Right, this is your everyday banking, checking accounts, credit cards, mortgages, car loans, the whole shebang. And this engine is absolutely humming, bringing in $3.4 billion in profit all by itself. But the number I want you to focus on is that 6% jump in card spending. When people are swiping their cards more, spending more, it's a really powerful signal that they're feeling confident about their jobs and their financial future. All right, let's shift to the second engine, global wealth and investment management. This is the division that manages money for the bank's wealthiest clients, through those big names like Merrill and the private bank. So this part of the business brought in another $1.3 billion. But the truly mind-boggling number here is the total client balances, $4.6 trillion. Just let that sink in. Now, that growth comes from 2 places. 1, the markets are up, so their investments are worth more. And 2, the bank is bringing in thousands of new wealthy clients. Okay, on to engine number 3, global banking. This is the part of the bank that deals with the big players. Huge corporations and businesses, on everything from massive loans to multi-billion-dollar mergers. This engine was a powerhouse, pulling in $2.1 billion. But the real standout is that jaw-dropping 43% surge in investment banking fees. What does that tell us? It tells us that big companies are making big moves. They're merging, they're acquiring, they're expanding. It's a classic sign of business optimism. And that brings us to our fourth and final engine, global markets. Think of this as the bank's trading floor, helping giant clients, like pension funds and asset managers, buy and sell stocks, bonds, and currencies all over the world. This division shipped in another $1.6 billion in profit. But what's really incredible here is the sheer consistency. Sales and trading revenue is up 9%. And get this, it's the 14th quarter in a row of year-over-year growth. That's 3.5 years of steady performance, even when markets get choppy. It's just a remarkably stable engine. Okay, so we've established the bank is making a ton of money. That's clear. But the next question is it healthy? Is it stable? Let's give it a quick financial checkup. Now, this slide perfectly illustrates a concept called operating leverage. It sounds complicated, but it's actually super simple. The bank's income grew by 11%, but its costs only went up by 5%. I mean, when your money coming in is growing more than twice as fast as your money going out, well, you're on a great path to becoming more and more profitable. Before we look at the next chart, let's just quickly define a term you're about to see, net charge-offs. All this is the amount of loans that a bank basically gives up on collecting. They don't expect to get the money back, so they write it off as a loss. And with charge-offs, you always want to see a lower number. Lower is definitely better. And check out this trend. Net charge-offs are going down, down, down. Over the past year, they've dropped from over $1.5 billion to well under $1.4 billion. This is a fantastic sign. It suggests that the loans the bank has on its books are high quality and that people are, by and large, paying their debts. Think of this as the bank's financial safety cushion, its emergency fund. This capital ratio, called CET1, it measures a bank's ability to handle a big economic shock. Regulators have a minimum requirement, and Bank of America at 11.6% is way above that floor. It shows the bank is really well fortified and resilient. Now, let's pivot and look toward the future. Because one of the biggest stories hidden inside these results is the insane acceleration of digital banking. This is all about how we do banking now, right from the palm of our hands. I mean, just try to wrap your head around the scale of this. 41.3 million people are actively using Bank of America's mobile app. That's not just a big number, that's a massive digital nation, bigger than the population of many countries. And people aren't just logging on to check their balances. In just one quarter, customers moved $143 billion using Zelle, that person-to-person payment app. That is just a staggering amount of money zipping around digitally without anyone touching cash or writing a check. And it goes beyond just payments. Customers talked to Erica, the bank's AI virtual assistant, 175 million times this quarter. This shows just how comfortable we're all becoming with using artificial intelligence to manage our finances day to day. So you've got Zelle for moving money and Erica for getting help. For the bank, this whole digital shift means they're way more efficient and their costs are lower. But for us, it means banking is just becoming seamless, woven into our daily lives more than ever before. So we've seen the bank is making a lot of money. It's financially healthy, and it's becoming more and more digital. But why should any of this matter if you're not a shareholder? Let's connect these dots to the bigger economic picture. When you step back, this report is kind of like an economic barometer. When we see people spending more on their cards, it points to strong consumer confidence. When investment banking is booming, it signals that businesses are optimistic. And, of course, the huge digital numbers show a fundamental shift in our habits. These aren't just numbers in a report. They're vital signs for the health of the entire economy. So, Bank of America's amazing quarter really does paint a pretty rosy picture of the economy right now. But the big question this leaves us with is this just a snapshot of a good moment in time, or is this a sign of more sustained growth to come? That's the real billion-dollar question.